Once again, ladies and gentlemen, y'all come in as I'm going to share this out. Where are we at here? Let's see what we got. How y'all doing on this nice, beautiful Monday, federal holiday for Martin Luther King uh, birthday, Martin Luther King birthday. Want to go live to talk about the bull market. So give me a second here as I'm going to share this out. Turn this down. Turn this down. There we go. Sorry about that for people that's coming in, guys and girls that's coming in. What we're gonna do here. Hello, everybody out there. Hit the thumbs up button as you come in, and we're just gonna sit back and have a little conversation and talk. So you get the thumbs up button and share button, all that other great stuff. Now, this is not my first live of the year. I don't go live that much. Thank you guys for hitting the thumbs up button. I'm sharing this on my Facebook page, the Investor Show on Facebook, my other pages, World Financial Investment Group. So if you're not following me there, that's definitely cool to do as well. So as you're coming in, logging in, tell me where you're from. Tell me where you're from as you're coming in as I share this out. Mm-hmm. Catch me live. All right. Kendra said, I swear every time you call me, he said, every time you go live, somebody calls me. Massachusetts in the house. VA is in the house. Okay. Nice. Kendrick Taylor, you've been holding me down for a minute, man. I've been seeing your name pop up all over the place. Definitely appreciate the support throughout the years. Lakeland, Florida is in the house. Okay. Wow. We're on the East Coast. We're in the South. Y'all know I'm in Denver, Colorado. I need a haircut too, huh? Chicago. Chicago, but stay in the SIP. Mississippi's in the house. Aurora. Okay. You right next door. Aurora, Colorado. We got Colorado. What's that say? Philly 21. All right, so we all over the place. We got Florida, Colorado, Virginia, Massachusetts, uh, Chicago, Mississippi is in the house. So all right. Let me share this out some more. So we're gonna get into it. And what comes up with this topic is, you know, I fell into I won't say I fell into a trap, but we hear so much when the market is going up, everybody's talking about it going down, right? And we know last year was a great year. So everybody tells you how to protect yourself, get ready for the down market. Economy's about to, okay, California is in the house. Okay, California, Colorado, Mississippi, Florida, Virginia, Massachusetts, all of the good stuff. Cool, cool. As y'all come in, tell me where you're from. Tell me where you catching this live from. I know a lot of people are going to catch the playback as well because my lives are unscheduled. I just get up, set up everything, but I'm gonna just go live today. I got something to talk about every now and then. I'm not a big live person. I know some people go live 2-3 times a day. New York City is in the house. Okay, I was in New York City uh, October last year. Barnes and Noble, New York City last year in October. So that's not too long ago. New York City was pretty good. Had some pretty good pizza up there. So I miss it. Pretty sure I'll be back one day. Let's see. He catch me live. All right, sharing this out to a couple more platforms, and we're gonna jump straight into it. We're gonna have a good conversation today. This conversation is very, very necessary um, because I kind of I look back on my past year and I see how my portfolio did and how others' portfolio did, and I see how could I make it better, right? And I look at certain ways to make it better, right? So one of the ways I do that is by catch me live. One second. All right. Let me do one last thing here. This is for my Instagram. I will never go live on Instagram, but I will for this real quick second here. Where we at on Instagram? Once I do this, and we're gonna jump straight into it today. I know y'all be like, man, could you just shut up and get into it? Okay. All right, everybody. I'm live here on YouTube. Swipe up to catch this live on YouTube, or you can catch the playback on YouTube or Facebook or whatever the case may be, or the podcast. But catch me live. Mm-hmm. All right. All right, that's enough. That's enough. Everybody else to catch it to playback. So anyway, we got Massachusetts, Virginia, Florida, Aurora, Colorado, Mississippi, California, New York City, all in the house. If you're coming in, drop a comment. Let me know where you guys are from. If you are catching this live, if you're not catching this live, uh, maybe you can catch it another time. I know I'm bad about that. I don't tell people I don't do scheduled lives. But anyway, without further ado, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys live all the way from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, check out the description box. And I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So today, y'all know, if who caught that episode with James Fortland yesterday, Uncle James? I put it out, I think it was yesterday, right? It was a show I shot in Hawaii, and I replayed it on my YouTube channel, and it's on my podcast, all of the good stuff. But last year, the last time he came onto the show last year, he predicted the bull market. Now, he had all these crazy speculations. You know, he's been on Wall Street for God knows how long, since the 70s, right? So he's seen a lot. And he came with a lot of speculations about Prince. This is the third year after the presidential election. This is a year that end in 9. This is the January barometer, the first 5 days of the blah, blah, whatever the case may be. And he made some very valid points. And we talked offline. We spoke offline. And he kind of let me know what his thought process was. And when he let me know what that thought process was, he kind of told me, he said, hey, Prince, I think it's going to be a great year. And I kind of believed him as well, but I wasn't 100% sure. So I kind of played it safe. I rode the bull market, but I kind of played it safe a little bit last year. As y'all all know, the market did very well last year. It did well in 2019. It slumped a little bit in 2018, 2017. So we've been in a bull market for 10 years. And the thing about it, and I was the guy too. I made videos. I told you guys and girls how to protect against a recession, how to protect against a market crash. My portfolio was almost too good to believe. I'm like, man, I just hit the buy button and it's just going up and up and up. Apple's going up, Google is going up, McDonald's is going up, Netflix is going up, Amazon is going up, this is going up. I mean, it's like, man, everything is just going up, and it just brought fear. I became kind of fearful, like, this thing could fall through at any time now. So I started to back away a little bit, started setting my portfolio with some bonds and some gold and some more conservative investments, started keeping money in cash because I didn't want to get caught outside with no clothes on if the market took a downturn, right? So as y'all liking the content, hit the thumbs up button. As you're coming in, hit the thumbs up button. Tell me where you're from. But I kind of didn't want to get caught with my pants down if the market was to take a downturn, right? So my thing was, I kind of played it safe. And looking back, I look at it and say, man, I should have really rode that bull market. I should have really took advantage of that bull market. And the thing that kept stretching in my head, when I'm looking at January barometer, I'm looking at all the indicators, and I'm saying, you know what? The market might make another run again this year. And if the market makes a run, like Hulk Hogan said, what are you going to do? What are you going to do if the market runs wild on you? I know that's corny as I don't know what, but that's to all my wrestling fans. When Hulk Hogan used to say, what are you going to do when something goes wild on you? I can't remember what his line was, but it was something like that. So my question to you today, and the reason what this whole conversation is about, and this educational video is going to be about, is What are you going to do if the bull market runs wild on you in 2020? Right? How can I take advantage of the bull? How can I ride the bull? How can I take advantage of the economy just going up and up and up and up instead of being negative Nancy? Negative Nancy, you stand on the side and you're like, well, everybody's buying. It's going to blow up on everybody. I don't want it to blow up on me. But, I have friends that's been doing this since 2015, right? Ever since the election season was going on, everybody was doing it or whatnot. All right, James Bond said, puts. I don't know what that means, James. Why are you going to buy puts in a bull market? I'm speaking of if you knew 2020 was going to be a bull market, how would you ride unless you're going to be selling puts? Are you going to be buying puts or selling puts? What you going to be doing, James? But if you knew it was going to be a bull market, if you felt strong that 2020 was going to be a bull market, how do you ride the bull, right? As I search YouTube, as I search everything around selling puts. Okay, James said he's going to sell puts. Willie Williams said, "What are you going to do when Hoka?" That's why I love y'all right there. Y'all just as weird as I am, right? That's what it was. What you going to do when Hulkamania goes wild on you, right? So if this market just continues to run, I mean, of course, it's not going to the market never goes straight up. It's going to go up and down, up and down. But just like it did last year, you had some down markets, up markets, but it went up, over time. So if this market continues to go up, is 2020 is going to be another bull market. What are you going to do? How do you prepare for the bull market? How do you invest for the bull market, right? Because I've seen so many people, I don't want to sound like a broken record, but I just want to reiterate this for people that's coming in, catching this live, even the people on the playback. You heard me say the internet is littered with the market is going to down crash. The market is going down. The market is going to, nobody's talking about the market is going to continue to go higher. Everybody is negative Nancy. That's what made James' interview so important. He came on last year when everybody was thinking the market is going to fall out. And with my portfolio, I was like, you know what? Just in case it goes up, I want to be able to get a little bit, but I'm protecting myself on the downside when I should have just rolled that bull. But I was kind of scared. And then I thought about it. Most investors that are invested into the market are people who are investing for 5 years or more, right? So if the market was to take a big deep dive this year, who cares, right? I've hold a couple companies. I don't even, got Lockheed Martin in some portfolios, all other stuff like that, right? If the market was to fall out today, is it really going to hurt me that much? If I'm a long-term investor, probably not. But would it really help me if the market really did have another roaring year or roaring 20s? What you going to do, right? So if you're a long-term investor, if you're a 5-year investor, if you're a 10-year investor, if you're a 20-year investor, you're a long-term person. And we know 9 times out of 10, the market is going to be bullish. We know history has taught us. We all know history is not a great indicator of future performance, but we all know the people that buy and hold for the long term are the winners in the long run. So if we know it's going to be a bull market in the long run, how do we ride the bull, right? So let's get into it. Ways that you can ride the bull. Now, companies for 2020 that I think that if we have a breakout year, companies that are James Bond said dividend, Coca-Cola, Pepsi, AT&T. Now, James Bond, people could be saying that buying Coca-Cola, Pepsi, AT&T, you're right. I see you paid attention to my last video. Those were the 3 companies that I brought up. If you brought Pepsi, Coca-Cola, AT&T, you will receive a monthly dividend. And I think it's about 3% right now that it pays out. And also you are pretty bullish because if Pepsi, Coca-Cola, and AT&T go up in value, then your portfolio goes up in value while billing you a little compounding interest there. But we all know when you play the dividend side of the house, companies like an AT&T or whatever the case may be that pay heavy dividends, companies that pay heavy dividends usually don't grow that fast. Now, Microsoft did have a good year and it paid nice dividends. Microsoft had an amazing year last year. But the companies that you see that had the breakout years like your AMD, Target, I think Target played a little dividend. But the companies like a majority of the times, companies that have breakout years companies that usually don't pay dividends. So let's take, for example, Google doesn't pay dividends, Amazon doesn't pay a dividend, but boy, did they have a return for the investors. So the question is, how am I going to ride this market? So sometimes some people say playing dividend stocks is a little conservative, not very conservative, but a little conservative. So companies that I think that will have a breakout year if we run into another bull, if the 20s is another bull, we're going to see companies like Amazon, Facebook, the Fang. Who knows what the Fang is? I want to see how in tune y'all are. What is the Fang? What are the stocks that are included in the Fang? Who knows what the Fang is? I'm gonna give y'all a second to tell me what the Fang is for the people that are catching this live. But those are the companies that I believe. Uh, Kendrick says watching dividend paying companies will have you in your feelings. Why you say that? Why you say that, Kendrick? Why will dividend paying companies have you in your feelings? I don't know. But the idea, what is the Fang? I want everybody that's in the chat room right now tell me the Fang. There we go. There we go. Max B. That's my homie right there, Max B. Max B said Facebook, Amazon, Apple, Google, Netflix. Y'all heard that? FANG. It's an acronym. Stands for Facebook, Amazon, Apple, Google, and Netflix. And when you look at all of the FANG, y'all correct me if I'm wrong, nobody in FANG, I don't know where you got Nevada from, James Bond. You off on that one. But Facebook is Facebook, Amazon, Apple, and Google. Apple is the only one that pays a dividend. And yeah, Kendrick, you're right. He's saying dividend paying stocks have you in your feelings because you see everything moving up, and dividend paying stocks really don't move a lot, right? When it looks at like Coca-Cola, I'm pretty much willing to take a bet. I think Coca-Cola is trading for about $55 right now. I'm willing to bet everything that I own Coca-Cola will not be over $100. Don't quote me on that, but Coca-Cola is probably not going to double itself by the end of the year. That's just not going to happen, right? But can it go to $60 and pay a nice dividend? Yes, right? If you line up Coca-Cola next to a Google and it's a bullish year, Facebook is probably going to win, right? Or Google is probably going to win. So the thing is the FANG, which is, I'm saying it again, Facebook, Apple, Amazon, Google, and Netflix and Google, right? FANG, FAANG. Those are the stocks that'll probably have a great year, right? Some people I know that's their whole portfolio is the FANG. The FANG stocks, that's it, right? So the people use the FANG as you listen to all those companies, those are like our new age technology companies that are very aggressive right now, right? Max B he's bringing up Disney. Disney is a big, large cap large cap company, blue chip, old school, pays a dividend. I can see it appreciating with Disney Plus. It had that run. I don't know if you paid attention to the last quarters. It had that run when Disney Plus got launched. We've seen Disney go up about 7%, but we haven't seen our go up or whatnot. We haven't really seen it go too crazy. Like we've seen Facebook had a great year. Amazon had a great year. Netflix had a great year. Google had a great year. I believe those companies are going to have a great year again if we are in the bull market, riding the bull, like I was saying. Another way, simple old purchasing QQQ. QQQ is a NASDAQ tracker, almost like SWPPX. When you look at the three major indexes, when you look at the Dow Jones, when you look at the NASDAQ, and when you look at the S&P 500, you see the NASDAQ over time is the one that has a good run, right? Has a better run. NASDAQ beat S&P 500 last year, and they usually beat them in the bull market, right? So, and the reason why is NASDAQ usually tracks 100 mostly tech companies, right? So, a index person, you may want to go over to the NASDAQ to ride the bull, right? Another thing a person could do. Okay, let's see what James Bond here said. He said Warren Buffett said he brought a single dividend stock for $114, and that same stock was compounding dividends worth $400K today. You're right, James Bond. That was a index fund he was speaking of, right? In that video, he was saying that, hey, if you put $114 into the index, I forgot how many years ago, and just let those compounding interests just compound over time. Fast forward into 2019 to 2020, we're at today, it'll be worth over $400,000. That's just simple buying an index fund and just forgetting about it, right? And he was saying that philosophy to tell people, when we look at the world of investing, it's so much stuff out there. You got this stock, that stock, that stock. And I sit down with parents all the time, and I'm excited that the parent is opening up a account for their children or grandchildren, but their mind just run wild with what they want to invest in. They're like, oh, I want to buy this company overseas. I want to buy this over here. And I'm like, well, just starting out with your portfolio, 50 to 60% of that should just be the index, S&P 500. Because you picking out these random companies, the likelihood of them being successful is very slim, very slim. So when you can't beat them, you join them, right? So I was like, hey, start out here first. Once you get your feet wet, you know what you're doing, then you kind of go up, right? But sometimes we are our own worst enemy. We know too much. We're too smart, right? I have so many investments books. I wish I can show you my library. Not a library, but one day it's going to be a library. But it has a bunch of books from formal education, informal education, all these types of things that are over here, right? And we have too much knowledge. We got bonds, we got stocks, we got this. You know, Max B, you're right. You got to have that baseline, right? You got to have that baseline sitting inside of your portfolio. We know too much. Every day you turn on, you got Bitcoin is going to take a run. You got this going, new age investing. You got savings bonds. You got CDs. You got so much stuff. You got media. Everybody's telling you about the hot new company. This company just went public. Guess what? Robinhood is probably going to go public this year. Postmates is probably going to go public this year. Um, DoorDash is probably going to go public this year. Now you're like, ooh, boom. Now I want to jump on this. Last year you had the Uber Lyft debacle, right? And James Bond saying for his daughter, he's running with Coca-Cola, AT&T, and Pepsi. Those are strong companies, dividend paying, high paying companies. How old is your daughter, James Bond? If you don't mind me asking. But when I look at it, right? When I look at it, I when I look at the world going forward, we have so much information that now 7. Okay, so he says his daughter is 7, and he's running with Coca-Cola, AT&T, and Pepsi. My personal opinion, that's great. Those are large blue chip companies that are going to pay dividends. She's going to be having compound interest and dividends. That's great for her. But to me, with a child that's so young going into the future, I like to um, put some technology in there, right? For prime example, my son right now, I know for certain he's upstairs, he's on the couch, he got that iPad in his hand, probably playing Fortnite. I'm almost guaranteed. I'll put about some dinosaur game. I guarantee that's what Wesley's doing, right? And I'm saying that, and he's probably got that on, and he's probably got the TV on with Netflix, right? So what I'm saying with that is the things that your 7-year-old daughter are playing with now are going to be the future. Think about it. We got up every day on Saturdays. We watch Spider-Man. We watch Batman. Now those are huge movies. We had Microsoft computers. We had Apple computers. Now look at those companies today, right? They're the biggest. We was playing with McDonald's, things like that. So I like to get companies that are, especially a 7-year-old portfolio, a little bit more aggressive. I want to put a little bit more spice on there. Google is the internet. Who disagree with who disagree with me about that? Let me grab some water. My mouth is getting a little stuck there. So Google is the internet. I mean, everybody knows what Google is. If you don't know what Google is, either you're a very young child or you're a very old person, right? And everybody know what Google is. Google is the internet. YouTube, Google owns YouTube. So investing into Google to me is like investing into the internet. So I would say some of the things, James, that you're seeing your daughter play with, that she's becoming very, very, very familiar with, um, that you're looking at, also take that into consideration to say, hey, because I look back and I'm like, Dad, you had a Microsoft, not a Microsoft, but he had an Apple computer. Like, Dad, you had an Apple computer. You never thought about investing in Apple? When I was like 3 or 4 or 5 years old, but my dad wasn't clued in onto investing. So one day my son is going to grow old and be like, Dad, why you never brought me Netflix? I watched it every day. I had an iPad, I had an iPhone. I love Apple products. Or Dad, you was on Facebook every single day. You ran ads on Facebook. You got all these, and you never thought about that or whatnot. So that's why he said, if you don't know what Google is, Google it. That's true. You don't know what Google is, Google it. So the thing about it is the thing that we're using every day. You get up every day and get on that Microsoft computer. Your daughter is doing some things every day that you could possibly be investing in. So that investment is what you said. What do you think about Tesla? Tesla finally went profitable last year. I think going into the future, Tesla got its earnings coming up here at the later of the month. We're going to see how Tesla's going to perform with the whole Cybertruck debacle. But I think Tesla going into the future is going to be dominant. It's the number one electric car manufacturer right now, and I think that Tesla is a baby compared to the other car manufacturers. For prime example, Ford is mature. General Motors is pretty mature. All these other Chrysler are mature companies, meaning that let's take, me at 35 and you got Wesley at the age of 8. Who do you think is going to grow more? Wesley I'm at 6'1", 6'2" right now, and I'm probably never going to go past that. Right. If anything, I'm gonna probably be an old man and hunch over or whatnot. So Wesley, I definitely think he's going to be over 6 feet tall. Right, I'd be very surprised if he's not over 6 feet. But he has a whole lot more room to grow, and I feel that's what Tesla's at. Tesla is an electric car company, and I think that he has a lot of room to grow with Tesla. Tesla just found a way to become profitable. They got SpaceX. They're getting a lot of money from the government for research and development. So I think they're positioned pretty well, and they have a lot of big money backers. So I'm bullish long term on Tesla. So James Bond said, my great aunt invested in Apple in the 80s, and when she passed away, she had over 5 million. It's exactly right there. She invested in, think about it. She's 80 years old, and think back when she invested into it, the way we probably look at Tesla, the way that we probably look at Uber today is how they looked at Microsoft back then. Microsoft was this, oh, look, we got computers, and one day everybody's going to be on computers and it's going to be on your phone. And that was some new age, far in the wind type stuff. Everybody was using typewriters, probably had a cord phone, a landline phone when she was investing into this new age Microsoft. So ask yourself, and your kids, James, is always the greatest indicator of the future. People that are 50 and over, I pay attention to them, but you're a little bit over the hill as far as purchasing power, right? It's the 10-year-olds that's going to tell you what's going to be hot in the next 10 years. So for prime example, when I made the video that Bank of America should buy ETrade, some people looked at me like I was crazy. Where did you get this wild idea from? Because I know the kids that are 10 years old, they're going to be more likely to use a ETrade, TD Ameritrade, an online platform app more than going in person, having a traditional financial advisor, right? So that's why I said, hey, to position yourself for what's coming up next, right? When we was going to school, we was learning how to use, computers. I remember we had to type of paper and they was teaching us how to print out. And I'm like, why are we doing this? My dad doesn't print out. My dad was using the typewriter. We was at school, they was teaching us how to use WordPress. So it didn't make sense to me. It wasn't relevant to me, but it was what to come. Now today, who's using a typewriter? Right? So ask yourself today, James, that's one thing I look at your portfolio. Yes, we know Coca-Cola is going to be around. We know Pepsi's going to be around. We know AT&T going to be around. We know you're going to have those strong dividends, right? But your daughter is using stuff every single day that you can make your portfolio a little bit more aggressive. That's my only thing. Something like a Google, you have things like Facebook, you have things like Microsoft, uh, Apple. These are, look into the fame. You got Netflix. I don't know about Netflix. He said we had floppy disks. Yes, we had the floppy disk. Who remember that? Then you know what? I remember when we had the floppy disk. Then you got the 3.5 disc. Boy, I thought I was something special. You had the 3.5 disc special case with it. You just pull out your 3.5, pop it to the side. Boy, you thought you wrote what you had on it. And that was something so, ooh, man, you was above the time. Nowadays, you look crazy. I did the unpacking of my latest book that I'm reading, and it had a DVD player. I'm like, a DVD player? What are you doing? I don't have a DVD player. Who has a DVD player? Y'all give me 1 second. I gotta hook my computer up so it don't die. Right? Give me 1 second. Yeah. Got that low battery signal. So just to think about it, how crazy are you going to look in the future when you're sitting back and you're going to be like, man, I used to watch YouTube all the time, Googled all this time, I never invested into it. So, okay, James Bond said, I watch Kim, show. She's a big tech stocks for the future. Check her out. Kim, okay, I'll check her out. I think I've seen that name before. Devin Smith says, what's up, folks? Hope everybody having a great weekend. So yes, Dervin, my bad. I said Devin. So Dervin, what's going on, man? So we're talking about the bull market, how to ride the bull market. So many times, you get so concerned with the bear. You're trying to time the bear. You don't know when that bear market is going to come. You don't know when that market is going to take that downturn. So you find yourself playing more defense than to play offense. And then I remember and told myself, hey, look, instead of sitting back and wondering, it's like, imagine if you're up. Who remember the Atlanta Falcons in the Super Bowl a couple years ago, right? Being from Georgia, of course, originally being a Falcons fan, now I'm Broncos all the way. But Colorado, Denver showed a lot of love. You've seen a lot of people from the Broncos on this show. They supported me big time since I've been in Denver. So, Broncos all the way. But anyway, if you remember, in the game of life, some people were playing to lose, right? You don't play to lose until you get in your financial position. Once I hit my financial number, then I can play not to lose. Yes, you're right, Max B. When they lost the Super Bowl, right? When they lost the Super Bowl, gave up that big lead. Because guess what? They started playing not to lose more than to win. So you look into the investing world, when you're looking at that bull market, we've been in a bull market for 10 years, right? Your portfolio should be saying you should be happy about stocks right now. But a lot of you are not because, one, usually you're too smart. Since Trump got elected, your portfolio, if you just had an index fund, you're up almost 50%. Portfolio overall. I'm not talking about one position. I mean, the whole portfolio. So people always hit me up, Prince, I got 10%. I know. I want to know how the whole portfolio is doing, right? How did the entire portfolio move, right? If your entire portfolio did not beat the S&P 500, there's a problem, especially when you're in the accumulation phase. You're trying to accumulate as much money as you can right now. So when you get to your investing time and it's time to preserve your money, now it's time to get that Coca-Cola. It's time to get the Pepsi. It's time to get that AT&T. It's time to get some gold to preserve your wealth, to be able to pay you a dividend out of your nest egg. But right now, we're trying to build that nest egg by any means necessary without being dumb at the same time. Okay. Marco said, what's the difference between trading and what Warren Buffett does? Here we go. And you know what? This was going to be an episode, and it will be an episode. And here it is. Gray Wallace said it, the 4% rule. You're right. That's my dog right there, Randy Johnson. Good advice. I have to check my portfolio out. I might need to make a move or two right later. All right, cool. There we go, Randy. That's my One of my righteous homies right there. But anyway, the difference between what Warren Buffett does and what an average trader does is this is the difference. What Warren Buffett is he's an investor. A trader is a trader, right? A trader is someone, they don't care about the fundamentals of the company. They're more of a technical analysis person, meaning they're someone who looks at a chart. They're looking for that double head. Who knows what that head and shoulders is? Who knows what that double bottom is? Who knows what those channels are? The downward channels, the upward channels. They're looking for that, right? There's someone, they don't care what Apple is going to be in 20 years. They want to know what it's going to be tomorrow. A Tesla. Okay, here we go. A person who buys Tesla stock is a long-term person. A person who buys a call option on Tesla today, anticipating earnings, is more of a trader, right? There's someone who's going to put in $2,000 a day because of what they know. They're looking for a big jump, right? They're looking for a big jump in Tesla due to their technical. They may have their technical analysis to tell them, hey, Tesla's going to make a big move to the upside, and they jump in there. They don't care about the fundamentals of the company. They don't care about what the assets are, what the liabilities are, what the colors are, or whatnot, or whatever the case may be. They're concerned about today. They're not concerned about, oh, so what is the fundamentals and what is the cash value? What are the earnings and what? No, they're looking for today, right? Versus an investor, he's somebody, he makes his evaluation. And he says, hey, this company is a bargain. This company produces this, does that. This is their finances, and they invest. They delay their gratification. They don't go get the brand new Jaguar they want today. They delay their gratification and they invest into a particular company like a Lockheed Martin or Uber or whatever the case may be over time. Then come to find 20 years from now, 30 years from now, or whatever, um, then go from 20 to 30 years from now, they're going to turn around and say, hey, look what I have, right? So that's the difference between a trader and an investor. Buffett is more of an investor. Somebody like Oliver Velez, one of my good friends who's been on the show here, he's more of a trader, right? Now, he does invest too, but he specializes in trading. So a trading person, and I like what Charles Payne from Fox Business said. I'm reading his book. You use fundamentals to tell you what to buy. You use technical data to tell you when to buy it. He's a believer in both. He looks at the fundamentals. He knows he builds a watch list off of the fundamentals. Then he uses technical data of when to jump in, right? So that's the difference between an investor and a trader. And Charles Payne is somebody that I know in his book. He kind of mixes both. So yeah, hit the as you come in, hit the thumbs up button, share this out to all your good friends, all the good stuff like that. So okay, let's see what we got here. What questions? Day trader, I trade beef. That's my man right there. Beef Entertainment, Rhode Island in the building. Okay. Next up, he says dollar cost averaging if you're nowhere near retirement, in my opinion. The I can't even say your name, Dahan, right? He's right. Right? Dollar cost average. Instead of sitting on the sideline waiting, you keep buying a little bit to ride the bull. You buying a little bit every month to ride the bull, right? If the market turns around and you get a deal, great on you. But you're buying a little bit to ride the bull. So you're riding the bull as you're going up, right? So you're riding the bull. You're looking at FANG stocks, right? You want to get a little bit more risque. You're someone who goes out there and buy call options. So here we go. Dollar cost average is another great one. I didn't even bring that one up. Now we're looking at okay, she's on Bloomberg. What do you think of Forex? Gary Wallace says, what's going on, Gary? He said, what do I think of Forex? Forex is more of a trader mentality, right? For the people out there who don't know, I've been saying I was going to make a video about Forex. Forex is the foreign exchange market where you're trading currencies, right? You're trading currencies back and forth. I know some people who are very good at it. Some people say they're good at it, but it's more of it's a 24-hour market. It's good for traders. It's good for people that know how to do it. I did Forex for a little bit, right? I did okay, but it just didn't fit my MO. I wasn't a big, dollars to looking at the pips, the 24-hour mark. You better know how to use your stops, all of the great stuff. It was just you get a better return. I know people do that for a living. Plenty of people who jump in there and trade forex for a living. Just something that just never really back then when I was into it, because I pretty much tried everything in investing. It did something that really didn't sit well with me. I liked the option trading more than I liked the forex trading personally, right? So that was just me, but it's pretty good. What do you think about for? Okay, what's your opinion on dividend growth strategies with a 30 plus year time horizon? Duran, this is how I look at that. First, when you are investing, I learned I'm probably gonna make a video, and I keep saying I'm gonna make a video on something. But first, you got to know what is your retirement number. If I ask, it's telling me I got 21 people in here right now, right? That's watching this live. Out of these 21 people that caught this live, how many of you guys and girls know your retirement number? And your retirement, not your age. I'm talking about how much money do you need to retire? How many of you guys and girls know that? You sat down, evaluated your finances, and said, you know what? I need $4 million to retire. I need $2 million to retire, because retirement is not an age, it's a number. So most people don't even know the retirement number, right? And if you know what your retirement number is, this is going back to your question, what you asked me about the dividend growth strategy. Let's say if I needed $2 million to retire, right? And I know today I have about 100,000. And I know I'm 35 and I got another 13 years. So I know if I have 13 years to get to $3 million, what return on investment do I need to make? Right? Once you know that, you might say, hey, you know what? I need to make 7% or 10% a year. Once you know you need to make 7%, 10% a year, some people may be 4%, right? You know what? What can I go to put my money to earn that 7 to 10% or 4% a year? Some people it could be stocks. Some people it could be dividend strategy. If I use my dividend growth strategy for 30 years, I only need XYZ, right? So that's what you need to look into, right? So, and that's what, and sometimes that 30-year growth, if you know, hey, I have a 30-year time horizon and I have a dividend growth strategy, that could fit into getting you to your number. So you got to know that. Max B said, I need to read that book. Okay. Well, I'm going to be doing a book review. I'm about halfway through that book right now. I'm about halfway through that book, and I'm going to do a book review. I'm going to tell you top to bottom what was the good, the bad, and the ugly about it. It's not a paid endorsement, anything like that. I took a liking to Charles Payne for watching him on Fox Business, and I wanted to know more about him. And, I went out and grabbed this book, and I'm looking into some of his stuff. So we're going to see. I need to get Charles Payne on the show. Yeah, I need to get Charles Payne to come on the show but I haven't reached out to him. I tried to reach out to him until after I finish this book. So, okay, BX, he said first live, good day. Okay, first live, good day. Okay. Layman 345 says index funds. That's true. Philippi say 3 million. I'm guessing that's her number. That's what she needs to retire, or he, right? Somebody said, okay, listen up here. We got, okay, my daughter has $4,000 to invest. She is 21 years old. I was just talking to her about buying Coca-Cola, AT&T, and Pepsi, like you mentioned. So should I wait to get her in when the prices pull back, or she didn't put an in on that? So, okay, so she has a 14-year-old daughter. She has $4,000 to invest. She is 21 years old, and she's looking to buy Coca-Cola, AT&T, and Pepsi. I've seen, man, y'all really be paying attention to me, That was, and the reason why she brought that up is that I pretty much did a video where I broke down, if you brought AT&T and Coca-Cola and Pepsi, they all pay dividends 4 times a year, every quarter. And they're just lined up perfect to where you can get a dividend every single month. Now, for a 21-year-old young lady, first thing I would ask is she debt free? I had to look at her whole financial picture first, right? Because it won't make sense for you to buy AT&T, Coca-Cola, and Pepsi and earning 3% a year off of dividends. And if the stock go up, let's say if you're earning 5 or 6%, but you got a credit card with that's maxed out that's earning 20%, right? So it would be best to pay off that credit card if you had $4,000. Okay, so you say yes, she's debt free. Now that she's debt free, the next question is, do you have an emergency fund? Now, the reason why I'm going to ask you, and I'm following, if for anybody that knows me, I'm going to follow Dave Ramsey's baby steps. 'Cause I think it's amazing, right? I think the steps that he's done. I've used them in my life. I've used them on other people, and they're great steps to go by. So, does she have an emergency fund? Because now that she's debt free, awesome, right? She's 90% of Americans. Now that she has that debt free done, the next step is: do you have any money set away for a rainy day? The reason why you need that money set away for a rainy day, just in case. All right. So she needs to have 3 to 6 months put back because we don't want her to start investing and then her tire blows. She got to go get new tires. So now she turns around and has to go sell off her stock when the market has crashed to go get her tires or whatnot. So boom, she needs to get emergency fund, 3 to 6 months worth of bills, right? I don't know what her bills look like, but have 3 to 6 months worth of her bills set up, right? Now, if she has that, now she's ready to start to look to invest, right? Now she's looking to invest. What does this mean when you are looking to invest, right? I would not recommend or look big into those big dividend stocks. Those dividend stocks are good for growth. They have their role. But for a young 21-year-old lady, I would like to see her be a little bit more aggressive in her portfolio. And what I mean by that, I would like to see her go more towards the S&P 500, the NASDAQ, or even um, looking into some things like I want to see her be a little bit more aggressive with, Apple. I want to see her be a little bit more aggressive with, I'm not recommending this, but I'm talking about things you should look into, right? 1 second. So I wouldn't be too fond of a 21-year-old young lady worried about collecting dividends. That would just be me. With $4,000, you have time for your money to grow. You got time to ride the bull. Ride the bull market. When I'm talking about bull is what goes up, bear is what goes down. You have, if the market was to go down today, she can still keep investing, right? Look at a company like an Apple. It's a growth company, but it does pay dividends. Microsoft. Microsoft pays dividends as well, and it does grow. It's a technology company. So I would be more in tune of companies like that for a younger lady, right? She has a lot of time ahead of her to grow her portfolio. Hope that helps. All right. What are your thoughts on UTMAs, 529s? Which one you prefer and why? The Dahan has said, okay, I prefer, personally, I prefer the UTMAs. You know, these are custodian accounts that this person is referring to. Thanks. Oh, no problem. Anytime. But yes, think about that. Just because I made that video not to say, hey, you can buy these stocks. I made that video to show, hey, look, you can earn monthly dividends by buying stocks. That was really my thing. I was just trying to show you that. But you can line it up. You can find her portfolio and build it with Microsoft and Apple, Lockheed Martin, all these big growth companies that are paying dividends as well. So she can still get those dividends as the stocks take off, right? Riding the bull. Okay, so UTMAs, I have more control. I can, like, if I have a 529 plan is federally regulated, but it's controlled by the state, and you only could buy certain companies, right? Meaning that not certain companies, you only could buy certain funds. I mean, I buy a 529, they're going to give me 7 funds to choose from. I put my money in the fund, and that's it. Right? So I'm not too big on it. That's the 529 plan. But the good part is your money gets to grow tax deferred. The bad part is at the end, when your daughter or son or daughter or whatnot, or whoever the money is going to go to, they have to use the money for what you call it, college expenses, right? If they don't use the money for college expenses, all these different bad things that's going to go on, right? So that's with me. That's why I prefer the UTMA because I get a little bit more control and I don't have to worry about the red tape at the end. So, but with the 529, you could go in there, you can pick the S&P 500 and just forget about it and keep dumping money into it. And once your son or daughter goes to school, they can pay for it, which is great. But I don't like all the red tape that comes with 529. I only can, and let's say if I just want to go buy my son some Apple, I can't do that with a 529. So I don't like all that red tape on my money. So that's my thing. That's kind of my take. Quick synopsis of it. Okay. Do you have any investment books? Do you know some investment books? Greetings from Mexico. I want to say this too. I always thought about this. I said I'm 35 now. I turned 35 in September. And I kind of told myself probably when I got about to the age of 50, 45 to 50 is when I will write my I've written children's books, but when I will write my adult book, I think I have more to learn and I got more personal life to go. So that's why one day I'm going to get there. But that'd probably be 15, 20 years from now. Right. So that's where I'm going to look at it. Okay, so investment books, yes, you have The Intelligent Investor. You got Seven Ways to Master the Money. You got Dave Ramsey's Total Money Makeover, which is more of a personal finance book. Once you read that book, you get to rearrange your money properly, right? And that can get you in a position ready to invest. Seven Ways to Master the Money. The Intelligent Investor, I like. Um, Investing Demystified by Lars Kroger. I like that book. Um, Man, I guess I need to sit down and come up with a book recommendation list. But I got a little library over there, and it's been a lot of good books over there that I read. So yeah, that's it. Here we go. What's the next question? What's great? What is great up and coming stock? One that should be investing based on growth. Dervin, my wish list stock right now, my hot, maybe they can make it stock is Uber. Uber is that stock right now that it could explode. If it finds a way to become profitable, it could explode. It got some good backing, and I feel like it feels like Facebook, and I feel like it feels like what you call it. But it's very high risk. It's a company that's not profitable right now, so that's the way um, you can look at it, right? Okay, 1 second. So Uber's my hot could make it stock, but a more safer bet would be like a Tesla that just became profitable. It has a lot of steam ahead of it. It just became profitable, and it could make a lot of steam going into the future. But that little hot one that could make it is Uber. I mean, when it dropped down to $25, 25, $26, I did a video on it here, and I grabbed up some, and now it's about to $35. I think I'm up like 30 some percent on Uber, but we'll see. The teller the tape. Okay. I think Ultra with 300-day call could be a good move. Ultra make okay, Cal. Okay. That could be James. I gotta look into that. Okay, so B said traditional or Roth IRA. Hit the thumbs up button. Tell me where you're from as you come in. What's up, Wes? Yeah. Again, Wes talking about he's hungry. What do you want to eat?
Pancakes or
Pizza?
no, no. I'm gonna eat chips.
No. You don't want pizza? We'll grab and eat once I'm done, okay?
Okay.
All right. So I gotta get up out of here soon. And West getting hungry. But traditional Roth, I look at it this way: a simple way. Do you want to pay your taxes now or later? Are you going to make more money? Are you making more money today? Or are you going to make more money in the future? Me personally, I feel as though I'm going to make more money in the future. I know I'm going to make more money in the future. So me, a Roth fits me. If you're someone that you feel like you're going to make less in the future, pay the taxes on it now. It's about being in a lower tax bracket. It's not tax evasion. It is what's the other word I'm looking for? What is it? Tax evasion versus tax. I gotta look it up. Let me see. One second, I gotta look it up. Versus avoidance. That's what it is. Tax evasion versus tax avoidance. You are 100. That's what it is. So you're finding ways to avoid taxes. That's why I would use the Roth for me. I pay my taxes now. I can put my money in there and I can grow my Roth IRA better now with paying the taxes now. So when I'm 59 and a half or when I'm old in the future, uh, when I'm in a higher tax bracket, I pay, taxes on the other way. So a way to avoid taxes. Okay. Can you really put $100,000 in a traditional Roth IRA? So if you have $100,000 cash, you're looking just to dump it into an IRA, is what you're asking? Or if you already have it in a Roth IRA, you might be able to roll it. I don't know about, 100. I got to look into that one to see how much cash you can come in with. That's pretty unusual. Dervin Smith said, I missed the shop. Do you think BYND can make a similar trajectory? I'm not sure on that one, Dervin. That one doesn't stick off in my head. I got to look into that particular company. So I'm sorry, but I can't get into that one. The Dahan says, what sectors are you currently invested heavily in? What do you think REITs a long-term play? Yes, I think REITs are a long-term play. Those are real estate investment trusts. A sector that I'm pretty heavy in, technology. Simple technology. S&P 500 technology companies in the S&P 500, right? That's the top 500 companies in America in the technology sector. Those are the ones that I believe are, hopefully take me to the moon, right? Okay, James Bond. I think a universal life insurance policy gets more growth than a 529. This is according to the book What Would the Rockefellers Do, right? Now, is this an index universal life or what type of life policy, James Bond? I got to look into that book. What Would the Rockefellers Do? That sounds like an interesting book. But we'll see. Darren said, appreciate the live. Yeah, definitely. Give it a thumbs up. If y'all like the lives, give it a thumbs up. They said, did you hear Amazon is trying to make your hand? Oh, yeah, I heard about that. I heard you're putting a little chip up under your car. Everybody was saying that was the mark of the beast. You can just swipe it. Amazon they get into that fintech world. That's when finances and technology come together, like us swiping our credit card, and they're trying to narrow that gap as much as possible, right? So a regular universal life policy, I don't know, maybe an index universal life policy, right? And I want to get one for my son, but he was diagnosed with autism, I think, when he was probably like 4 years old, and he got declined. And if I could have gotten him one, I would have gotten him one, right? I'm definitely not against the IUL index universal life policy, but since he couldn't get one, I had to find other ways to invest for him. But that's not a bad thing. But anyway, I've been here for almost an hour now, so I hope everybody likes this content. Proud African American. What's going on? Decline makes no sense. Well, what do you mean by that? A proud African American. So, but yeah. So yeah, give it a thumbs up if you guys like the content. I'm gonna get ready to head up out of here. I gotta get ready to y'all heard Wes come down here and tell me he was hungry, so I go find him something to eat, find me something to eat, right? Cook something. I probably won't. I'll probably go grab something. I know I'm horrible. Oh, my son being declined? Yes, he had autism. Yeah. Because it's not that he had autism, it was because of the medicine he was taking when he was 5 years old. So Wesley got declined when he was about 5 years old because of the medicine he was taking and whatnot. And they told us to try again once he was like 8 or 9 years old. So yeah. So we wanted to get him an index universal life policy back then at that time when he was about 4 or 5 years old. But that's what happened. So Max B, if Apple started taking taking away cell lines because of AT&T sell the Wi-Fi. For okay, let me see. If Apple start taking away cell lines, Verizon AT&T sells Wi-Fi. Okay, that's true. I think that has to be a long time before Apple really start to explore becoming a cell phone service provider, right? So we'll see. Okay, you get it. Oh, okay. I see Earl Johnson in the building. But thanks for always bringing value all the time. I see what you're saying, Max B. That Verizon and AT&T. And what do you think? F- I'm thinking this fool talking about Facebook. Oh my goodness. Do I think? Yes, I think Apple will hit 400. It's only a matter of time. It's $1 trillion company. Yes, Apple will hit 400. You heard it here live. I'm a holder of Apple. I just don't know when, but it will hit 400. You know what? Proud African American, you're going to be sitting here. You're going to be, I don't know how old you are now, but let's say 20 years from now, you're going to be like, I remember when Apple was $300. Watch. Guarantee you, unless they split, right? You remember Apple was at $700. Who remembers when Apple was at $700? Apple went to 700. Apple split down to $100. Now it's back up to 300. So Apple has already been over 400 before. Apple was at $700 before it was even $1 trillion company. And I did get a chance to, I didn't get a chance to meet him, but I did see the Apple CEO, Tim Cook, at Berkshire. So, but anyway, because guess what? Buffett put $25 billion into Apple like 3 years ago at a meeting. He announced it like, oh, yeah, I'm buying $25 billion of Apple. Now, that $25 billion he put in 2 years ago is worth $90 billion, right? That's why I probably saw the CEO of Apple walking up in there. But so Apple has already been in. Do your research. You will see Apple's at like $700-800 at one time. It did a stock split to where all of its stocks went down to, if you had one share at 700, you now had 7 shares at 100, and now it's at 300. And it wasn't even a $1 trillion company back then. So is it going to go over 400? Of course. If you know when it's going to go over 400, let me know. I like to buy some options, but I know it's going to go over 400. And I'll just be personal. I had McDonald's in my wife's portfolio, right? And even though McDonald's was making money, she wasn't a big fan of McDonald's. She was like, well, I don't eat that. I don't like McDonald's. I think it makes you sick, da da da. So to make her feel better, I jumped her out of McDonald's and I got into Apple. And Apple is still done pretty well. And McDonald's did well at the time too. So no love lost, but I wanted to make her feel comfortable with what was in her portfolio. Oh, he said leave a video on YouTube. Oh, he's coming all the way from Mexico. We got somebody from Mexico checking in. How about that? We got Mexico in the house. We all over the world with everybody that's tuning in that told where it was from. But yes, definitely. This is going to be on YouTube for the playback, and also it's going to be on the podcast as well. And you know, the podcast, if you're not following it, the podcast is on iHeart. The podcast is on Pandora. We're on iHeart. We're on Pandora. We're on Spotify. Pretty much anywhere you can catch a podcast or audio or whatnot. You know, SoundCloud. We're on SoundCloud. So anywhere you like to get your audio, you want to catch a playback, you can't catch it live, you can subscribe all over to our support. And also go out there if you haven't yet, if you're tuning in, check out the Wesley Learns book series. If you haven't gotten your copies yet, I don't know what you're doing, right? That's the Wesley Learns book series. Wesley learns to invest. Wesley learns about credit. Wesley learns about insurance. The only of its kind, first of its kind, father, son, you know, everything, right? Y'all got to go have those. Support me. I appreciate that. Oh, he said, great video with Uncle James. Yes, you know, I had to bring back Uncle James. Uncle James laid it down, man. He came last year when everybody thought the market was going to crash. He made his crazy voodoo weirdo predictions, and he was right. So it was only right that I bring him back to let him know, hey, you was right. Tell us how you was right and what you think of this upcoming year. Right. So yeah, great video on him. Y'all go check out that episode too. Nothing but knowledge. And I want to say thank you to everybody out there. We just crossed over 28,000 subscribers. I'm probably gonna make a video about that too. So we crossed over 28,000 subscribers, 3.2 million views. We crossed over 3 million views, 28,000 subscribers, and over 9 million minutes of watch time. That's a lot. 9 million minutes of watch time, over 3 million views, over 28,000 subscribers of straight knowledge, education. That's very difficult. We don't do gossip. We don't do, entertainment. So that's very hard and, very good because a lot of people, they think that, hey, you got to entertain, entertain, entertain. But I like to see that. So I definitely appreciate that tremendously. So y'all know my phone's going off at the same time. So anyway, I appreciate it. Okay, Dervin, this is the last question. He said thoughts on 5G technology. It's the next thing. What does he really think about it? I mean, I think it's awesome. I mean, it's great. It's anything technology. We're going to get better. If you think we're going to sit on 3G, 4G 20 years from now, no. You think we're going to be carrying around these big blocky phones and we're going to be laughing about this in 20, 30 years? Man, we had those big phones. We used to always, you know what I mean? So it's just technology does that. I mean, it just is just going to evolve. So I think 5G technology is a great thing. They've been talking about it for a while. So I'll be right there getting it, man. I need a haircut bad. But y'all are my real people that tune in. But I want to say thank you guys for making this YouTube channel successful. Over the 28,000 subscribers, 9 million minutes of watch time, and 3 million views. Straight knowledge and education, no gossip, no nothing crazy, no whatever, just straight knowledge. I appreciate it. And I appreciate everybody, all the guests that came on, all of the subscribers, all the supporters, the shares, the likes. I appreciate all of that, right? But he said, "You're welcome." Hey, I appreciate that, African, proud African American. I definitely appreciate it. But then again, it didn't come fast. I've been on YouTube for 6 years. Right now, now I'm not a YouTuber like some people go live and 2, 3 times a day, and they constantly putting up content all the time. That's not really my life, right? I spend a lot of my time reading. Go ahead, get one more question in. One more question. I spend a lot of my time reading. I spend a lot of my time. The reason why I can come on and talk to you guys and make the content I make is by reading and studying and going to meetings and all the other great stuff. All right, got one last question. What do I read? My current read right now is I'm in school. One thing, my formal education, I'm doing certified financial planner. My informal education is on reading Unstoppable Prosperity by Charles Payne. But what I have read is a long list. From the Intelligent Investor to uh, just about everything on Warren Buffett almost. Intelligent Investor, Seven Ways to Master the Money, Investing Demystified, to self help, to Dale Carnegie, to I mean, if I'm saying his name right, I have read a good bit of. I'm pretty proud of that. When I was a kid, I hated books. What about Boeing competitors like Airbus? You're talking about Boeing? Are you are you serious right now? Are you comparing Boeing to Airbus? Right. The first thing I can tell you about that, I haven't even looked into Airbus. I would take that. Right. I don't know a lot about Airbus off the top of my head, but I would tell you this. Boeing is the number 2 government contractor, right? They're the number 2 government contractor in the world, meaning they're getting billions and billions on top of billions of dollars from the US government to build planes, to build aircrafts. So just from that, from Airbus, I've heard of it, but I don't know a lot about it as of yet. So, but from the eyeball test, I would say it's no comparison to a Boeing. Do I think Boeing is a promising investment, or do I think Airbus? Which one are you talking about? Kiki Licious 99. Y'all got some crazy names on here. He says, same. I hated books too. I hated English. Goodness gracious, I hated English. Yeah, I hated books as a kid. I never thought in my wildest imagination I would buy a book one day. If you'd have told me when I was in high school or when I was a young man that I was going to buy a book, I thought that was like one of the dumbest things in the world. Why would you buy a book? I hate books because in school I had to read and I didn't have time to go pick up a, like some of my brainiac friends and classmates would do. They would, in their off time, they would go pick up a book and read. I'm like, man, you crazy. I'm only going to read what I got to read. But now look at me now. I got a little bookshelf. I'm proud of myself, and this my bookshelf is kind of overflowing. Like I'm literally buying books now. So the thing about it is I got out of that poor mentality. Poor mentality is to buy what you want, beg for what you need. Right? Here I am. I can buy all the crap I wanted to buy, and I buy all the crap I wanted to buy. And when it came down to books, I was thinking, oh, we was a charity case, but no, you need to be buying your own stuff. So now one of my most prized possessions is probably my autographed book collection. And not even think that I'm reading books. I don't wrote three, meaning granted they're children books, but I wrote three books, and here I am working on book four. Right. So I mean, it's a beautiful thing. I mean, it's a thing of maturity. As you get older, you become a man. You got to start reading. Security Analysis is another book by Benjamin Graham. I mean, man, I'm just, I'm looking over at my bookshelf, but it's so many books. I may have to start putting that up, y'all. I may have to start a little book club. I may have to start a book club. He said Airbus. I have to look into Airbus, Kiki Licious. I gotta look into Airbus. He said, Max B said, LOL for real. Now I see why people read now. Yes, I definitely do see why people read, you know. And you got to look at somebody like a Warren Buffett who just sits in his office and just reads and reads and reads and reads and reads and reads. So now you've been doing that for 80 years. This man got a whole index of books, right? Yeah, Max B said he'll join. Yeah, I may have a book club where we read books and we kind of discuss investment books. Them the only ones I'm not going to, self-help investing books and business books are like, I would say self-help business books and investing books are the ones that I would be a junkie on. Everything else, all that superstitious, I don't, I ain't with all that. Something that'll hold my interest, I have to read what I'm interested in. That's what I'm interested in. Yeah, you're right. I may have to do something like that. May have to start. What would I call it? Maybe the Prince Dykes Reading Club. Maybe the Investor Show Reading Club. But anyway, book club or whatnot. That'd be dope to see a bunch of people come together with investment books and kind of share ideas and stuff like that on investing and stuff like that or whatnot. Level of competency, yeah. So, but anyway, I gotta get out of here. I know Wes is probably upstairs. He's probably drinking a bottle of syrup or something. But I know he's hungry. I gotta grab something to eat. Business Insider. But yeah, I appreciate all you guys and girls that's tuning in across the globe, across the nation. Appreciate all the support. Continue to support me, and I will continue to support you. Drop me if you got a YouTube channel. Let me know what your YouTube channel is so I can subscribe to it too. All right, or podcast or whatever you may do, so I can support back. All right. Until the next video, podcast, cartoon, or whatever else you see me doing crazy around the globe. I need a haircut too. Peace. Be safe. I'm out. Thank you.